Welcome back, everyone, to the deep dive. We've been getting a ton of questions about what's going on with the crypto markets. Specifically, a lot of you are wondering about the recent dip.
Yeah, it seems like everyone's feeling a bit of that crypto winter chill right now.
So we've done some digging. We've been analyzing the market sentiment, the price action, all that fun stuff to try and get a clearer picture of what's really driving this downturn as of April 7th, 2025.
Uh-huh.
The crypto space can feel like a roller coaster sometimes, up, down, loop to loop. Our mission here, though, is to give you some solid insights without completely overwhelming you with information.
Straight to the point, no fluff.
Right. So, diving right in here, it seems like one of the major factors at play right now is President Trump's reciprocal tariffs. These were just announced on April 2nd, and, well, let's just say they've got some people on edge.
Yeah, I mean, anytime you introduce tariffs, especially like these, which are a minimum of 10% on all imports, potentially higher for some,
Yeah.
yeah, it's bound to create some ripples.
So let's break those ripples down a bit. What's the immediate impact we should be keeping an eye on?
Well, I think the biggest concern right now is the potential for a slowdown in the global economy. And with that, of course, comes increased volatility in the markets. I mean, we've already seen traditional markets like the S&P 500 react pretty negatively to this news. And that kind of caution tends to spill over into assets that are perceived as riskier, which, let's face it, cryptocurrencies definitely fall into that category.
Exactly. So it's almost like this collective, like battening down the hatches kind of vibe.
Yeah.
Investors get a little spooked when there's this kind of economic uncertainty and they start pulling back from anything that seems too, well, volatile.
Which brings us to Bitcoin, right? I mean, we've seen it drop below $82,000 recently. So is this a direct reaction to the tariff news? I'd say it's a pretty strong indication that investors are moving into what we call a risk-off approach. When the global trade outlook gets murky and there's that fear of renewed inflation, which, tariffs can absolutely contribute to, investors tend to pull back from assets like Bitcoin.
So it's like this domino effect, right? One thing triggers another.
Exactly.
And it's not just Bitcoin either. We're seeing similar dips across the board. Ethereum, Solana, XRP, they're all feeling the heat.
Right, it's not isolated at all. These widespread declines really point to a broader sense of unease in the market. It's like we saw earlier this month, in April, where the market reacted in a similar way. So this could potentially mean billions of dollars being wiped off the total crypto market capitalization in a very short period.
Okay, so we've got these tariffs creating some anxiety, but it's not the only piece of the puzzle, right?
hmm
We also have to consider the bigger economic picture here. So what role do things like recent job reports and upcoming inflation data play in all of this?
Well, what's really interesting is how these macroeconomic indicators can actually amplify the impact of something like these tariffs.
Hmm.
So the job numbers that came out on April 1st, and then we've got the consumer price index data, the CPI, that's coming out on April 10th. Those could either signal a weakening economy or potentially persistent inflation.
Right, so those are like really key data points.
Yeah, and in a market that's already on edge because of these trade tensions, any negative news on either front, whether it's the economy or inflation, it can really intensify that move away from riskier assets, which of course puts even more downward pressure on crypto prices.
So we're kind of in this waiting game, seeing how those numbers shake out.
Yeah. And it's important to remember that the crypto market, it often reacts quite strongly, quite sharply to this kind of information, especially when you have these major policy shifts happening at the same time.
It's like everything's getting amplified, right?
Yeah, it's all connected.
Yeah. So, speaking of things getting amplified, we also have to talk about liquidations. Those can play a pretty significant role in a downturn like this. Can you maybe unpack that a little bit for us?
Sure. So when the market takes a sudden nosedive, like we're seeing now, traders who are using leverage, that's borrowed money to basically amp up their potential gains, they can find themselves in a really tough spot. If the price moves against their bets, they might be forced to sell their holdings, and that's just to cover their debts. And this selling pressure, especially when it's happening on a large scale, can create a snowball effect, pushing prices down even faster. It's kind of like a cascade of forced selling.
So it's like a chain reaction.
Exactly, like dominoes falling.
So it sounds like we've got a whole bunch of factors converging here, creating this, well, pretty intense market climate. But one thing we know about crypto is that things can turn on a dime, right?
Absolutely. I mean, market sentiment is notoriously fickle. It can shift incredibly quickly.
Yeah.
And, while we've highlighted some of the key potential drivers behind this downturn, it's really important to remember that the crypto market is inherently volatile.
So for those of us trying to stay on top of things, trying to keep up with these rapid fire changes, where should we be looking for the most up-to-date information?
Well, I'd say the best thing to do is keep an eye on real-time price trackers.
Hmm.
Platforms like CoinMarketCap, those are great for getting the most up-to-the-minute data. And of course, staying updated with news from reliable sources on platforms like X is crucial. That's how you get the immediate pulse of the market.
So to kind of wrap things up here, it looks like as of April 7th, 2025, this crypto market downturn is being driven by a pretty complex mix of things. We've got these new tariffs sparking global economic worries. Those worries are impacting traditional markets. Recent and upcoming macroeconomic data is adding to the uncertainty. And then on top of all that, we have the potential for liquidations to really accelerate those price drops. It's all very interconnected.
Absolutely, it's all tied together. And I think understanding these interconnected elements can really give you a much clearer perspective on the forces that might be at play here, even when the market seems like it's in chaos, even when it feels super volatile, which it often does.
So as we sign off here, we'll leave you with a final thought. Given how quickly global economic policies can impact even decentralized markets like crypto, what kind of long-term strategies do individuals need to be thinking about to navigate this ongoing uncertainty? That's something to ponder until our next deep dive.
Yeah, definitely some food for thought there.
Thanks for joining us.
Until next time.